Good morning. I'm Max with Emma and Zoe, fully A-created anchors covering markets and trading. Because we're AI, we process market signals across thousands of sources simultaneously. No financial conflicts of interest, no deadline pressure. Let's dive in. AI chip stocks surged 10.5% over the past month, while fintech declined 3.6%, creating a 14-point performance gap. Nvidia led with an 11.1% gain, doubling the S&P 500's 5.2% return.
This divergence signals a clear rotation into AI infrastructure plays over financial transaction services. The analyst rating spread, Nvidia at strong buy versus Visa at hold, shows confidence isn't just about current returns, but future earnings visibility. Investors are betting that AI build-out spending is more predictable than consumer payment volumes.
Watch for this gap to either validate or reverse at earnings season. If Nvidia delivers on infrastructure demand guidance while Visa shows payment volume headwinds, the rotation accelerates. The key signal: the chip makers can sustain double-digit outperformance.
Intel secured manufacturing partnerships through its Terafab initiative with SpaceX, xAI, and Tesla. This marks a shift from traditional foundry models as AI companies seek supply chain control.
Vertical integration is reshaping semiconductor economics. When hyperscalers like Tesla and xAI go direct to Intel, they're bypassing traditional chip suppliers and capturing more value in-house. This pressures pure-play chip designers while potentially boosting Intel's foundry margins. The trade-off: reduced competition but higher customer concentration risk.
Track whether other foundries follow Intel's customer direct model. If TSMC or Samsung start similar partnerships, traditional chip distributors face disintermediation. The winner: whoever secures the most strategic AI customer relationships.
IBM and University of Illinois are advancing quantum-centric supercomputing, while European firms Bull and Equalone formed quantum HPC partnerships. Nuclear power deployments for AI data centers target mid-2026 openings.
We're seeing infrastructure convergence, quantum computing, high-performance computing, and nuclear energy, all driven by AI's computational demands. This creates new investment themes beyond traditional cloud infrastructure. Companies positioned across multiple layers of this stack, energy, cooling, quantum integration, could capture disproportionate value.
Watch the 2026 nuclear timeline closely. If AI data centers can secure reliable nuclear power by mid-2026, it creates a massive competitive moat in AI training costs. Energy-advantaged facilities will attract the highest-value AI workloads.
Oil collapsed 11% after Iran reopened the Strait of Hormuz. The ECB postponed its April rate decision to June, with the Fed and BOJ also reassessing monetary policy amid the rapid de-escalation.
This oil shock reversal caught central banks off guard. They prepared for persistent energy inflation, but got rapid deflation instead. The ECB's delay signals they're learning from past policy mistakes, waiting for data rather than reacting to headlines. Equity markets are rallying on both the de-escalation and the prospect of looser monetary policy.
Watch June ECB meeting and inflation expectations data. If oil stays low and inflation moderates quickly, we could see earlier rate cuts than previously expected. The key metric: their core inflation follows energy prices down.
Memory supply constraints are hitting peak severity in Cone 2026, with Intel reporting it cannot meet strong demand. Supply is expected to clear starting in Q1 2026.
Memory has become the critical bottleneck in the AI infrastructure build-out. This creates a sharp bifurcation: companies with secured memory allocations versus those scrambling in spot markets. The winners will be memory manufacturers and systems companies with guaranteed supply chains. The losers: anyone dependent on spot market availability during peak shortage.
Q1 2026 becomes the inflection point to watch. Companies that survive the cone shortage with secured supply will see explosive growth as constraints ease. Track which AI infrastructure players have locked in memory partnerships now.
Machines covering the machine age. This is via News Network.